Welcome to Early Edge Club. Before we deep dive, we are opening Early Edge Club to a small cohort of serious microcap investors. Every month, we deep dive into two microcap stock chosen by the community. You will be surrounded by thoughtful, like-minded investors from diverse backgrounds, and we are keeping this group small intentionally to preserve the quality of discussion and make a real personal connection. If that sounds like the kind you want to be part of, fill out the short form linked in the description and we will reach out to you soon. Today's section is divided into understanding first the business model, the industry, and then we use our 20 factor scoring, and finally our take on valuations and risk. Just to be clear, this is not an investment advice. Our goal is to help you invest smarter and safer and not tell you what to buy.
Australian Premium Solar India Limited. It was incorporated in 2013 and it is a Gujarat based company involved in the business of solar energy. It manufactures solar panels and the company operates across three business verticals, which is retail rooftop. In this segment, they serve both the residential and commercial clients. Next segment is solar pumps, and last is distribution, their wholesale business of all their solar components. If we see the industry overview, according to Modor Intelligence, solar panels, the global market for solar panels is estimated to grow with a CAGR of 21.64%. And these are the some of the global players, Longi, Zinco Solar, etc. And if we see the Indian market size, the Indian solar market is also estimated to grow with a CAGR of around 20%. So both globally as well as in India, the solar energy market is about to grow with a good CAGR. Moving forward, solar pumps. So this is something which they have started doing. So in India, solar water pump systems market also has a CAGR of 15% over the next 5 years. And if we see current capacity according to 2021 data, 40 gigawatt was installed. But the target of our government is to install 300 gigawatt of solar powered pumps. So this is both the segments, solar pumps and solar panels, both have good CAGR growth. So moving forward to our framework. So section one, governance and promoter behavior. So if we see IPO, so the company raised an IPO in Jan 2024 and it raised 27 crores. So most of these funds were used for working capital and general corporate purposes. Of the entire amount raised, only 12% was used for capex. So that is the reason I gave three. Moving forward to director and promoter track record. So Mr. Nikunj Kumar Patel is the chairman and executive director of the company, and he owns 37% of the company. And his mom, dad, and brother they own rest of the stake. And whole-time director Mr. Dhaval Sutar is there, but he doesn't own any stake. So their track record was good. There was nothing bad remarks found on them. So I gave five. Moving forward to related party transaction. So yes, there were some related party transaction, but it was with their associate companies. So I found it fine. So I gave three. And board independence and composition, if we see, so number of directors were five, out of which only two were independent directors and two were family on board. The one other guy was additional director. So because the independent directors and family on board are almost same, so I gave three for that reason. And moving forward to salaries, so I didn't find the salary of chairman and executive director, Mr. Nikunj Patel, but I found the salary of whole-time director. So whole-time director salary was fine. So I gave five. Key person resignation, if we see, only company secretary had resigned in March 24th because she had another assignments. So due to that reason, I found it fine. So I gave five. Auditor resignation. So there was no auditor resignation. So I gave 5 year. Auditor opinion and credit opinion. If we say the credit opinion they have received last year, CRISIL triple B minus and CRISIL A3 for short term and CRISIL triple B for long term. Auditor opinion was also unmodified. So I gave five also. Regulatory and legal issues. There were some direct and indirect tax matters which were highlighted in the RHP of the company, but there was none in FY24's annual report. So I gave 5. Investor communication and disclosure. So yes, all of their investor communication was there: PPTs, con calls, results, quarterly and annual. So everything was there. So I gave 5 years. Moving forward to our section 2, which is financial health. So if we see business concentration, so in top 10 customers, they had a high concentration. This year and last year, they didn't mention anything. But because what they are doing is they are getting some of their clients from before FY24, most of their business was from Gujarat. So there was some concentration there. So I gave 3 year for now. Moving forward, revenue growth versus receivables. So the reason why I gave 0 was, if you see, the receivables growth has always been high for the last 3 years. It has been higher than the revenue growth. So I found it a bit odd. So I gave 0 for that reason, because the receivables growth was very high. So moving forward to operating cash flow by EBITDA. So if you say it has been good, it dipped in FY24, but it is fine now. So I don't think so they mentioned any reason for the dip. But if we see, it has been good, so I gave 3 for now, because it is a bit less, but it's good right now. I think they'll do good. And moving forward to inventory trends, so DSO was good, so I gave 5. Cash conversion cycle has mostly been negative, which is good for the business, so I gave 5 also, 5 year. And then capex by revenue, if I see, it is also fine, so I gave 5. Debt was negligible and interest coverage ratio was also good, so I gave 5. Quick ratio and current ratio were a bit less, but still they are fine, so I gave 3. And ROE and ROC, if you say, it has been good for the last couple of years. So I gave 5. Revenue growth was very good, but margins, they have a bit less margins. But they will improve. But right now they have a bit less margins. So I gave 3 year for that reason. So moving forward, some of the key takeaways and highlights from the con call. Their current capacity which they are utilizing it to 70 to 75%. Up to 80% they have, I think, capacity utilization is there. And revenue per 1 megawatt, they are getting 2.2 to 2.3 crores from 1 megawatt. What next? So right now they are manufacturing two types of solar panels, mono and poly. So the difference between them is, I think, bit of difference is there in the solar cell. So basically, I think the poly one is a bit dark, and their, what do you say, efficiency is better. Efficiency difference is there. And what they are doing right now, they have planned to expand 800 megawatts of TopCon expansion. So TopCon is the latest technology. So they are doing that right now. So from poly and mono, they are old technology. TopCon is the new one. So they are building a facility which produces TopCon solar panels. So they have planned 800 megawatts, out of which 400 megawatts would be operational by July 2025. So for this, they have done a capex of 70 crores, mostly to bank loans. And when this 800 megawatts would be up and running, so the working capital that would be required to run this 800 megawatt facility would be around 80 crores. So this is what they have mentioned. Moving forward, so they also have a plan to enter into solar manufacturing. So what they are doing essentially is they are backward integrating. They are manufacturing solar panel right now, but they are getting the solar cells from other companies. So now they are going into solar cell manufacturing also. And for that, they have already acquired a land where they can build a 4 gigawatt plant, out of which the first phase, 3 gigawatt, will be operational by March 2027. And what they have mentioned is, from FY26 to FY27, the company will be doing a capex in the range of 850 crores. So it is a huge capex for the company. And they are planning to raise this funds by a mix of equity, debt, and internal approvals. And what they have mentioned is, because the debt which they are taking will have an interest cost of less than 10%. And they are taking this debt from HDFC Bank and Bank of Baroda. And the revenue guidance which they gave was they expect the revenue to grow at 70 to 75% for the next 2 to 3 years. And after 3 years, they are expecting a 40 to 50% CAGR in the revenue after 3 years. So the guidance is also very good. And EBITDA margin, they said that we should only expect the EBITDA margin to remain in the range of 13 to 15% at the max. So this is what they told in the con call. Moving forward, the solar pump segment, which they have started right now, it is very profitable. Currently, they have a order book of 300 crores, which is huge. But the only problem here is that because this is 100% government right now, the orders that they are getting is 100% from the government. So the receivables days are a bit high. They have a 6 to 10 week receivable cycle. So that is the only problem right now, that receivable days increase. But ultimately, it is from government. What they mentioned was moving forward, we can expect a product mix of basically 10 to 15% revenue would come from retail rooftop, 35 to 40% would come from solar pumps, and balance would come from distribution, that wholesale business. And 2 years back, before their IPO, they were mostly operating in Gujarat. Now they are expanding and targeting deeper market penetration. So right now, 40% of their revenue comes from Gujarat, 20% from Rajasthan, and 10 to 15% comes from Maharashtra and other states. But they are trying to expand this even more. And lastly, because they are into renewable energy, so they are getting some benefits under the PLI scheme, I think, renewable energy policies. So either they can get a 25% GST refund, or they can get a reduction of benefit in the capex of similarly 25%. So these were some of the highlights. And if we see, as per our framework, the score comes out to be 81.
I hope you found this framework useful. If you follow this company or have any interesting insight, we would love to hear from you. Drop a comment below. If you have scored this company using our 20 factor scorecard, feel free to share your score and how it compares with ours. If you found this useful, consider subscribing and also check out other videos where we break down more microcap companies and SME companies. If you are interested in joining our small research first cohort, the link to apply is in the description below. Thank you for watching, and we will see you in the next one. Bye bye.